The company we're talking about today has 7x'd its stock price since it IPO'd in the summer of 2020. And this company is Durham. And for everyone who hasn't seen any of my previous videos on Durham, this might be the first time you've heard about this business. Durham is a leading provider of cloud-based software technology solutions designed to improve efficiency and increase productivity for legal and business professionals. That still might sound a little bit fuzzy for you guys, so let me explain it a little bit further in layman terms. Durham has a cloud-based platform that allows legal professionals to go on there and do their entire workflow, everything from searching public record databases to preparing documentation and filing that documentation away in an electronic format to the public records. Traditionally, how this is done is lawyers have multiple programs that they have to go through to be able to search for documents, then prepare the documents, and eventually file them off. The advantage that Durham brings to law software is that it has all these functionalities on one platform instead of having multiple windows open and trying to switch between all of them and transfer information from one platform to another one. And at the end of the day, what they're doing is saving their customers time, and time is money. And if you guys have ever hired a lawyer, you know how expensive it is. So if Durham can automate the form filling such that these lawyers don't need to fill out like your legal name, your birth date, and your address, and it's just all done for you within their platform, this will save their clients money as well as having the lawyers perform more value-add work. And right now, if we look at all the legal tech firms in Canada, Durham is the #1 player. Usually when you're investing in software in a growing niche, you want to invest in the #1 player because most people want to buy the best software out there, and the #1 player is offering that. And for Durham, they're offering the most comprehensive workflow software that essentially streamlines all the processes for the legal professionals. So from the law firm's perspective, they want to automate as much of the mundane tasks and have the legal professionals do all the value-add work, which software can't do yet. Durham already has a very sticky platform, such that when people come onto the platform, it's very difficult for them to leave, because there's probably a lot of settings in the software that they'll need to port over, as well as just previous work that they've done on the software that they can't easily port over to a competitor's product. As well, with all the acquisitions that Durham does, they make sure to acquire deeply embedded software platforms that their customers are dependent on for their business. And so far, the track record is that they've done 19 acquisitions and they have an average customer lifetime of 16.6 years. There aren't many software companies out there that have customer lifetimes of 16 years. Most of the revenue that Durham earns is from a recurring transactional basis. So basically every time a lawyer or a legal professional uses the platform to perform a search or prepare a document or do some sort of filing, there's a fee charged for that usage. And there's a couple ways to pay, whether they're billed at the end of the month or they just buy some credits such that it just deducts from the credits. There's also some very small portions of the business that are actually recurring revenue, where customers will be paying a monthly fee for certain services. The transactional revenue from each customer can vary from month to month, depending on how many contracts the law firm actually gets. But it's not like that law firm is going to be using multiple softwares and figuring out which fees are the cheapest. Each law firm will typically commit to one single software platform, especially if it's an all-inclusive platform like Durham's. So as long as people continue to need lawyers for their real estate transactions and other commercial transactions, then Durham's business will continue to flourish. And if you guys are in Canada right now, you know the real estate market is extremely hot. So there's a lot of people going out there trying to buy houses. The new houses are being sold out completely, as well as everything on the market is being bought up in a shorter period of time. So we can see lawyers right now are very busy with the real estate business, and this is only benefiting Durham. Durham has done 3 acquisitions since December 1st, 2021. So basically in the last 90 days, they spent $630 million on acquisitions. One of them was Due Process, which is the #1 provider of real estate software in Canada for legal transactions. Another one was SAI, which is a new strategic market for Durham. Basically, they enter the Australian market. On top of that, we can see on February 5th, the company signed an agreement to acquire Global X, which is also another Australian company. And this company is double the size of SAI at $166 million. Versus SAI, they acquired for around $89 million. So in the past month and a half, they've acquired 2 companies in Australia. Also on December 10th, the company has also completed the acquisition of Due Process LP, and they paid a total of $541.8 million. And this is quite a hefty price to pay for a company that I believe generated around $31 million. That was the best I could find on this website here, where we can see that Due Process had estimated annual revenues of $31.9 million. So basically the PS ratio for this company was around 15 based on the price that they paid. But we can see that Due Process is the number one provider of real estate practice management software in Canada. And they managed over 1.4 million transactions annually. If you want to see when I'm actually buying into Dye & Durham in real time, check out my Patreon group down below. Now, quickly glancing over the second quarter 2021 financial results, we can see that the company is growing their adjusted EBITDA like crazy. So for 2021, they estimate they'll have around $80 million of EBITDA, and in 2022, it's going to be $200 million of EBITDA. So that's growing more than 100% next year. From 2020 to 2021, it's already growing more than 100%, and these are just estimates, but I believe Dye & Durham will probably hit these numbers, especially with the latest acquisitions. We can see further down that the company generated revenues of $33.7 million and adjusted EBITDA of $17.1 million. And this represents a growth of 96% for both revenue and adjusted EBITDA. Now, the company provided a financial outlook, which is quite uncommon for companies right now, just with COVID-19 going around. They forecasted for 2 years from now, June 30th, 2022, that the adjusted EBITDA and revenue would be over $200 million and $340 million respectively. So revenue right now is around $33.7 million for the quarter. So we can say that they could probably earn around $40 million for the year based on their current business. But in 2022, that's going to more than double to $340 million. So this company is growing rapidly right now. It's growing triple digits year over year. Its market cap, if we look at Google Finance, is around $3.37 billion. So still a fairly small company compared to all the other giant tech companies out there. As well, it has a dividend yield of 0.14%. So if you're a dividend investor or you just love dividend growth investing, then Dye & Durham, consider adding this to your portfolio. If you really love dividends and just want a dividend from Dye & Durham, then you're going to have to buy the shares before March 12th. And the dividend, though, it's quite small at around 2 cents per share. So it's nothing that you should be going out there and loading the boat on just for the dividend right now. Another thing that I love about Dye & Durham's business is that every time they onboard a new customer onto the cloud platform, their EBITDA margins just continue to grow because each additional customer doesn't add that much cost. The cloud platform has upfront costs of developing the software. However, when a new user comes on, all they have to pay for is maybe like AWS credits for every time a user performs a search. So you can see the cloud platform has a high upfront cost, but going forwards, every single usage of the cloud platform is very minimal. So I estimate they probably have margins of anywhere from 80 to 95% for each transaction that they have on their platform. Now, taking a look at the company since they IPO'd, originally back in July they said they had around 25,000 customers. However, during their latest report, which was on Valentine's Day, they reported that they had over 50,000 customers. So they doubled their customer base by 2x in the span of 7 months. And since then, the shares have 7x from around $7.50 to about $52.63 today. Now going forwards for Dye & Durham and what my plans are, currently my cost basis for Dye & Durham is just under $20 and my gain on this investment has been 196%. Originally when I bought into the company, I knew a little bit of what it was doing. However, I wasn't super excited about it since its total addressable market is only around $3.3 billion from Canada, Australia, and the UK. And this is a fairly small total addressable market. They have yet to expand into the States, but when that news breaks, I believe Dye & Durham will shoot up to at least double its current stock market price. So if there are any dips in Dye & Durham, you know I'll be buying this stock. Right now at $52.63 and their earnings, which they announced just yesterday, I believe the stock will be up quite significantly on Tuesday or tomorrow morning when the market opens. So if it is up quite a bit, I probably will wait for some cool off or some consolidation before I buy in. And if it doesn't pop too much tomorrow, I will be buying a few shares. When I reassess this business and see how it's growing at least 100% year over year, and their EBITDA is predicted to grow 100% this year in 2021, as well as another 100% in 2022, I think this business is going to eventually catch on to a lot more investors out there. I don't expect it to be on the front page of anything because of the space they're in, and not many people know about legal software out there. So I think right now it might be a time to get in, especially before they enter the US market. Once they do that and people catch on to this fast growing company, that's when we're going to see some more explosive growth as they scale out into the States, which is the largest total addressable market at around $10 billion. That is basically a 3.5x of the total addressable market right now between Canada, Australia, and the UK. And just for you guys who are wondering what price target I would set on Dye & Durham, I would say I'd be buying the stock around the $50 to $54 range. If it drops back into the $40 level, that's when you should be loading the boat, I think. Definitely keep your eye peeled for any sort of insider selling, which is probably what will be the only thing that will drop the stock. Or if the general stock market sells off, then I think Dye & Durham will drop. So those are all my insights on Dye & Durham and what I'm thinking behind this company. Let me know if you guys have any other angles on Dye & Durham and things that I might have missed, because this isn't a full comprehensive video. Leave those in the comments down below, or just hit me up with a Discord group and we can chat there about Dye & Durham. If you guys want to check out other videos on Dye & Durham, check these out here on the screen. If you're there, I'll see you there. If not, keep up the grind and have a great day.